Hello, everyone, and welcome back to another episode of the Market Outlook series with me, Kavita Agrawal. Thank you for joining in today. The session was supposed to happen on Friday, but it could not. So it is happening today on Monday instead. We will start off with what's happening in Nifty and what to expect going forward. So let's move this away and let's change something. Okay, there we go. All right. Great. So, just a few reminders. If you have Q&A, you will need to register here because as per SEBI regulation, I need to keep record of people whom I answer queries for. So please make sure that you register and appropriately ask your questions so I can answer them for you. Now let's get started with screen share and discuss what's going on in Nifty's chart. So we've got the Nifty daily chart open here. So you're seeing the Nifty chart, and underneath that you're seeing the RSI. Underneath that you're seeing the volume represented by MACD with the average of 20 days over 100 days. The RSI is 25 period that you're looking at. Now, on the daily chart, we can see that the support level identified at around 24,500. This has acted out pretty well. And here we saw a little bit of a bounce, despite of a breach, we saw a bounce. But this bounce again has taken resistance at the marked level of around 25,100. Right? Now, this again, before taking resistance, also the resistance was also breached with a gap up opening and then some correction over here. On the daily time frame, on a broad perspective, there is support at the level of 40, which indicates that we can expect the which indicates that the underlying bull trend is still strong. This we've discussed multiple times. One thing that does worry me based on the chart that I'm looking at right now is that volume picked up over here, right? And when that happened, even though it's not a very smooth pickup, it's more in fits and starts, but still overall the price has been in decline. And this rally that we've seen has not seen any volume pickup. That concerns me, right? This indicates, like, this might be an indication that this is just wave A, this might be B, and we can expect more correction, which means that it is important to have a strong risk management applied on your active positions. Before this support was taken and before this rally actually started, we discussed multiple times that there is a very good chance that 23,900 is the level that might be tested by the markets. And if this support gets breached again, then we can expect 23,900 to be retested, which wouldn't be surprising considering this blue line also that is present here. It is a 250 EMA line. And in the past, if you see multiple times, this 250 EMA line has acted as support for the market. A lot of times it's also been broken, like for instance here. But even when it is breached, the market doesn't go very far beyond it, except for this exception. We don't see this line getting, and this exception, we don't see the 250 EMA getting breached, especially not very frequently. Right? So I would expect the 250 EMA to continue to be support here. So that's the daily time frame. Going down to the 75-minute time frame. Now, on the 75-minute time frame, when this entire correction was unfolding, right, this point onwards, July 11 onwards, we see that the RSI had been in the negative range. Now, here very briefly, when this higher high was forged and this resistance was breached, the RSI did go overbought here. Now the question is it going to maintain that? So right now, short term, the market does continue to remain positive. And obviously the 20 EMA, which is this light blue line now, this 20 EMA is also a very important support that has time and again acted out in the market. So this can be a temporary support. Let's see whether, so this was a support. This has already been breached yesterday or Friday itself. And now this 20 EMA is another support. Let's see whether it will get filled or not. Now, I believe that if this gap over here starts to get filled up, then we can expect 20 EMA also to get breached and correction to continue. So this is a temporary support around 24,667. But like I said, I think if that this gap starts to get filled up, then I would expect 23,900's approach to become more realistic. Right now, this rally that has started is not giving me a lot of conviction. All right, so with that, now let's move into the analysis of sectoral indices. Wishing a very good morning to Kiran as well. So today is 25th. We'll change the date. So this is the segment of the stock indices where we see bullishness. These are indices where we see some potential, and then these are sectoral indices where we think it's pretty neutral. So since IT has caught my eye for being 2.5% up today, let's take a look at the IT chart starting on the weekly. So on the weekly, what we are seeing is it did break this level of 40 a little briefly here on the weekly time frame, which did not give me a lot of confidence. Um, Negative divergence here, which is again worrying for me. This breach is also worrying. So this bounce could be a temporary bounce. So I don't think that the overall IT sector index is looking healthy at all. I would want to see it go overbought before I start trading in the IT stocks. So this continues to remain neutral or bearish or don't touch category. So we'll keep this there, and since we've already analyzed it, I want to move it to the end. Okay, let's do what we've already done and organize this. And let's start off with CNX Finance. Now, CNX Finance had a negative divergence on the daily chart, but since then, the price has given some correction and it has touched the 100 EMA here. Now, I see that this level I had an alert which has been triggered, so I'll just delete it. So it had given a nice bounce up with a gap up opening, but is it going to sustain it? So weekly, we had observed that there was RSI positive range shift. Daily had formed um, downtrend and a negative divergence, and this is pullback to potential entry zone. So this was potential entry zone, sure, but we still have to wait for sustenance here. So I think I'm going to delete this alert for now. What is the 75-minute time frame saying? So 75-minute time frame is kind of, it appears like it is struggling since this massive negative divergence was forged. You can see it's not moving the way it was moving earlier. The momentum is definitely lacking here, and I don't like these kind of moves where there are massive gap ups and they just and then also covered frequently. This doesn't make the chart look any stronger than before. So this bearish momentum kind of is persisting. We had moved it back to bullish last week because it was very close over here, as you can see, very close to going overbought on the 75-minute, but it doesn't seem like it is going to sustain. It was very close to the support over here. It did bounce back on Monday, but it hasn't sustained it, and this is not good news, in my opinion. So I think I'm going to move it to neutral, not even to potential, straight away to neutral. Bank Nifty, I think Bank Nifty on 75-minute time frame is definitely sustaining in the mm, negative range. It did bounce up from the 100 EMA, but it's back there. So that again is not giving me any confidence. So again, we'll move that as well to neutral. Same goes for private bank, almost exactly the same chart. FMCG daily is in bull range, and the 75-minute time frame is in positive range. So this stock does continue to look bullish, which makes sense. If the broad market is becoming negative, then FMCG automatically starts to look pretty bullish, pretty attractive relative on a relative basis, if nothing else. PSU Bank, where the PSU Bank chart is looking divorced from the private banking, finance, and bank Nifty index charts, and 75. So on the daily time frame, despite negative divergence, there's still some. I would say the overall trend is still positive. 75-minute time frame. What are you trying to say? Not much clarity, though I would say there is this negative divergence for sure over here. And since then, the level of 30 has not been touched. So I would want to see some correction back here. So I'm going to move it to potential, not to neutral. Next is healthcare. So in healthcare, I can see on the daily we have positive range unfolding right now, which means the underlying momentum is positive. It is rallying. It will be interesting to see whether or not it creates a higher high above this entire resistance zone. Now, this resistance zone is extremely important because three times breakout has failed here. So this is a very important resistance zone for healthcare, and I think until this, and I think it can rally for another 2%, which would probably mean another weeks of bullish activity in the healthcare sector. So we'll just wait it out and see. We'll continue to keep it in the bullish segment. What about pharma? Pharma again is in the bullish range, positive range. It has taken good support at the 250 EMA, and let's see if it creates a higher high, a sustained higher high or not. On 75-minute time frame, it is definitely entering the bullish range now, but it does continue to look good. So we'll maintain it in the bullish segment. What about consumer durables? In the consumer durables, okay, so Mahindra is saying that he's not able to join. Mahindra, I can see other people have received links and have joined. Um, I hope you've registered before the session started, because if you've registered just now, then you will receive the link for the next session. It doesn't, hold on, let me just help you out in this case. Or let me actually just message my associate, she can help you out. All right, let's see. Continuing. So, Maida, I've asked Nida to get in touch with you. She'll help you out quickly. All right, so consumer durables, again, it is in the bull range, and just like FMCG, it is looking better than the other sectors. So we will continue to keep consumer durables in the bull range. Now, infra. Now let's see what's going on in infra. Well, the 75-minute is in a negative range. It again touched 60, but it failed to cross above it, which is sad. This pullback, mixed signal, this is higher high formation. So this higher high was formed, but I can see that it's again coming down below it. So what is not good in infra is that it touched 60 and started to turn down again. RSI 25 period, that is, right? So this is very typical in negative range when a positive divergence gets forged, as you can see over here. Positive divergence gets forged and there is a little bit of a rally, but that rally gets stopped once RSI reaches close to the level of 60. So that's what we are witnessing. What about oil and gas? Oil and gas. So infra does not no longer looks like it has potential because okay, it does have potential because on the daily it's still in the positive range. 75-minute, however, is suggesting continued correction. So I think I'm going to move it to neutral because in the short term I'm not going to pay attention to infra stocks anymore. Which is the next one? Oil and gas. Oil and gas 75-minute again weak, same thing, rallied a little bit but touched 60 and turned back, which is indicating that the short-term weakness, which we had noted a while back, with which basically was well established after the break of this key support level, continues on oil and gas. So again, have to move it to neutral. What about what about energy? Energy has given a very slight breach over here. And this also was in the negative range since this point where it broke below the level of 40. And on the daily, it's a negative range, which is actually quite scary. So I think even energy, I'd been monitoring energy thinking it has potential, but honestly, nothing really popped up with any offering of a potential position making setup. So we're going to move it back to neutral. So clearly, what is standing out is a temporary improvement in broad market structure that we had seen has deteriorated with very high speed across different sectoral indices. What this basically is indicating us toward is that the bounce that we're noticing that we've witnessed in Nifty might have simply been a dead cat bounce in the market, and the broad structural integrity is still compromised, and we need to be careful with our capital. Okay. Consumption sector has witnessed a massive gap up here. Daily has gone into bull range, and consumption is definitely looking pretty strong. So we will move consumption up as well. So you can see all defensive sectors are the ones which are looking pretty strong. Last is reality. I don't have much expectations here. Pretty sure it's looking the same as it's looking the same as infra, negative range, short term, not bullish at all. So PSU Bank is the only one that is showing potential. All defensive sectors seem to be showing some signs of bullishness. So this is very strong caution that the market is hinting us at. Right. That being said, I would like to start answering questions now. So as soon as our members who joined us on Zoom can start answering them, we will take up those stock queries. There are generic questions on YouTube which I'd like to answer. So there's a question: do I provide any course? So a course is something that is pre-recorded that you can go and watch. I don't have a course, but I do have a live training session. It's 24 session long, spread over 12 weeks. We have weekend classes in the morning. So right now the fifth batch is ongoing, and we are done with half the classes. The new batch is going to start from October. So if you want to sign up for that, you can visit this link, expinvest.in/ASTT, Advanced Swing Trade Training Program. When you visit this link, you'll see all information about the curriculum, the structure, what we cover and everything. So make sure you check it out. If you want to continually get information about new batches or campaigns or my services like short-term trading and long-term trading plans and so on, you can join my Telegram channel. Just search Trade with Kavita on Telegram and join that. But fair warning, there are lots of fake channels running with my name, so please be careful. It has also come to my attention lately that there are lots of more than 50 fake profiles on Facebook. I don't know what Facebook is doing, but clearly not quality control. So there are more than 50 fake profiles, and they are relentlessly sending messages to people, inviting them to ad hoc groups and even asking for money. Please know it's not me. I will never reach out to you actively. I don't have the time, patience, or I'm not investing in that kind of marketing at all. So if you're getting a message from somebody who is using my photo and promising amazing returns, it's not me. Please be careful of frauds. All right, so we will continue with some more generic questions. All right, okay, so far I'm not seeing any questions. So what I will do is, since we have a lot of time left, there are a um, bunch of alerts that I have. I did not get a chance to review my alerts, so I will have to. I can go through those. So Satvik, whatever your question is, I would appreciate if you could share it in the chat, and I will attend to your question. Okay, so Mahi, who has joined on Zoom, has a question on Inox Wind. So let's assess that. Okay, so any specific question or just view? Okay, fine. You want my view on Inox Wind. So I don't think it is bullish right now. So it's in the negative range. It was bullish since May 23, uh, and it stopped being bullish after December 24, and right now it's clearly not at all bullish. So I don't think you should go for making any positions here, because even though it looks like it's close to a support, there is no saying whether this A, B, C correction is over, because it's a little premature to assume that this is a truncated C. This might just go on to the next support level over here, which is a pretty large decline. So I don't think this looks bullish at all, and you should not touch the stock as of now. You are right. I did miss those sectors. Where are those sectors? Why are they not part of this list? Why is auto and defense? It used to be part of this list. Weird. Anyway, I will definitely go back and correct that. Thank you for the heads up. It didn't strike me. And auto, in fact, how could I forget? I wanted to discuss auto because massive change in the auto sector recently. So we will open CNX auto and we will add it to this segment, bullish segment, because over here you can see that there's been a massive breakout in the auto sector, and you can also see this auto sector breakout very clearly on charts as well. Maruti has given a breakout above the key resistance zone with good volumes. The whole auto sector has also given a breakout above this key resistance very strongly. The 75-minute time frame is in the bull range, the daily is in the bull range, and the auto sector is definitely looking more attractive than it has in the past. Now, one thing you will notice, the underlying trend of the auto sector is in general pretty bullish, and this strong movement, it has established itself in the bull run once more. Right, so auto sector is definitely looking quite bullish. We will also take a look at the CNX defense. Sorry, Nifty defense. If there is any other sector that you think I might have forgotten, I would appreciate if you can message and let me know. So defense sector, interesting that, so this was a pretty strong decline that we saw here, started with a negative divergence. So let's mark the negative divergence, right? Negative divergence because okay, I can call this a negative divergence because this is also pretty high point, and between this, so between this point and this point, price has created higher high, but RSI has created a lower high, and this doesn't look very good. But now we can see some consolidation happening in the defense sector. Now, a lot of people will make the mistake of jumping into the sector when this happens. But mind you, the 75-minute time frame is extremely bearish. So we can expect the RSI to kind of improve, resist 60, and then the correction to continue. This, what you're experiencing, is just a breather. Don't mistake this as a bottom formation until you have enough evidence. The first piece of evidence would be formation of a higher high above this level of around 7980 or 8000. Second evidence, necessary concrete evidence, would be the 75-minute time frame going above the level of 60 and establishing itself in the bull range. So unless that happens, I don't think it is prudent to at all, you know, uh, make any positions in this. Let's see, capital market index. What is the capital market index? Do you know the, Satvik, do you know the, let's see if it's called Nifty Capital or CNX Capital. Nifty Capital Market. Okay, let's also look at this index and, uh, yeah, there it is. Oh, oh, I just added stocks to this and I forgot to look at metal as well. Okay, we'll also look at metal and we'll also add a Nifty Capital Market Index to the list. Okay, so a Nifty Capital Market Index. Okay, so here we have a negative divergence and this is going into correction. Now, here temporarily it did go up, but on the 75-minute time frame, again, we're seeing clear cut loss of momentum, negative range resistance. So, capital market index is also looking neutral, not bullish. Next, let's take a look at metal index. Metal index is trying to turn positive. It is very unclear, but I think I will not call it positive because it is not clearly positive. Okay, so I have this thing where I recognize that the market has four different conditions, right? One is uh, it's going up in the bullish market, or it's going down in the bullish market, it's going down in the bearish market, or it's going up in the bearish market, right? Our probability of making most money is when the market is going up within a bullish market, correct? I believe right now we are in this. Okay, the overall market is definitely bullish, but it's going down right now, and not like right now as in since 1 or 2 days, but I think this entire correction is an intermittent correction, but it can last a while, right? Now, since this is where we are at, making money is not going to be easy in this quadrant. So what we have to do is we have to patiently wait for this quadrant. What we're seeing in CNX metal right now with this little bit of upside that is happening is in a broader downward correction, there is an intermittent rally that is unfolding. So we are here, not money making, not money making, not money making. Why is this understanding so important? Because our brain has a tendency to draw us towards biases. So if you're not focused and if you're not objectively analyzing the market, this is obviously going to look like bullish to you, but this is going to look like will turn bullish soon. This is going to look like, which is upside in bear market, bottom fishing, or this is going to look like, oh, let's rush into the market, things are turning bullish again, and this is going to look like it will turn bullish again, so let's buy everything very cheap. But you should absolutely avoid the market in all these three categories. You should only participate in the market when this is active, right? So that is something that it's a little snippet from my advanced swing trade training program. And if you're interested in learning this and more insights from me, then you can again sign up for the next batch, which is going to start in October. The reason why I'm telling you about it already is because there are limited seats, and typically by the time the new batch starts, seats are already full, and then you will anyway have to enroll for the next batch, which is going to start in 26. All right. So with that, I think now we are done with PSE. Yeah, CNX PSE. Why did CNX PSE not show up? That has historically been part of the list. Oh, there it is. Yeah, I missed another sector. Thank you, Satvik. You're very helpful today. Thank you. Okay, so again, this also is in the negative range. It has been for a while now. Another favorite sector of retail traders, but you have to be careful. Despite of the fact that it is showing a positive divergence over here, I will again wait for the two concrete confirmation signals, which is number one, it establishes a higher high on the 75-minute time frame. So it is showing RSI PD, but we need a higher high to make sure that the new trend has started now. On the daily time frame, it's a negative range. So the least we need is the 75-minute time frame turns positive. First, that will turn positive, then daily time frame will turn positive. And when the daily time frame is actually positive, is when we will get active in this sector. Why will we not get active in this sector or any other stock or any other sector while the daily time frame is not bullish? Because we are only interested in long side only trades. And if the daily chart itself is not positive, then the quality of signals that you get and the quality of uptrend that you get, right, even though it looks like an uptrend, is really bad. And if you don't have quality signals, you can't make quality trades, which means you can't make money, right? So improving probability of success is very important, and that only happens with high quality trade setups, which only happen in underlying bullish trends within bullish markets, right? So that's what we kind of wait out for. um, Uh, okay, so IT sector I've already covered, Vijay. You can scroll back and you can check it out. Agam has a question about CMT. So he's asking, is CMT beneficial in India? How a 21-year-old charter holder can use it? I'm giving level 1 this December. So I think, Agam, I personally find that CMT has done a lot for me in my career, especially where I am right now. So I completed my CMT back in the year 2021, when I was yet to graduate, yet to get my BCom, but I'd finished it. So I'd just become 21 when I finished my level 3 exam. Um, and for me, initially, like it was great for me because I love technical analysis, right? I'm very passionate about it. And I knew since I was 17 years old that this is where I'm going to make my career. I didn't know what it would look like, but I knew it was what I was going to do. So pursuing CMT did help me out in getting my um, internships and my initial getting my initial practice in place, in the sense practice as in my internship, like to do better, understand charts truly, develop those early insights and build foundation so that I could do what I'm doing today. But beyond my internship, I would say the CMT did not help me much with job hunting. I did do a full-time job as a technical analyst when I was in the second year of college, but that didn't last long, because I understood that even in the job market, when there are openings for technical analysts, they are actually looking for people who have MBAs, ironically. So the CMT back then did not help me much because honestly it did not have as much recognition as it has today. But today, how and where the job market stands, it is evolving, but it's really not at a place where I would say CFA is. So personally, in my career, the CFA did help me land high quality jobs better, which I wouldn't say I thrived at, because as you can see, I'm not in the corporate world anymore, and I'm following my passion. So those were good temporarily. CFA did help me get into that, but CMT, I wouldn't say did a lot for me. Outside of India, I think in the USA, CMT has a lot of weightage, recognition. In India, it is still trying to kind of build its ground. So if getting into the corporate world or getting jobs is your um, main focus, then I think you should do CMT and CFA both. But if you want to do your own thing, if you want to trade for yourself, if you want to use technicals the way it is supposed to be used, if technical analysis is your objective, then CMT can be pretty useful for you. All right. So cool. So with that, we come to the end of today's session. Thank you so much, everyone, for joining in. I will see you again on Wednesday, and I will be recreating the Zoom meeting. So make sure you sign up at the link expinvest.in/join, and those who register for it will be getting the new link because the current link seems to be having some issues and people are not automatically getting it. So I will be fixing that. And other than that, if you have any further questions, oh, sorry, Agam has another question. Thank you for the reply. I am targeting Wall Street via CMT after getting my chart. I might just remind. To if you're just target, if you're talking again, see Wall Street more than CMT values top-notch MBA. And if you're talking about Wall Street, you're talking about MBA from a global top-notch college, not just India. So that's unfortunately the reality that I have come across. I may not have complete information, but that is what I have seen. That's what is prevalent in my circle. That is what I have heard from most people. That is what I see on job postings from top colleges. So that is what is there. The CMT will definitely give you an edge, and you have to understand that CMT actually is a super specialization. It's not entry, it's not suitable for anything entry level. It is typically, if you look at the average age of people who are pursuing CMT, it's a lot higher. People already 5-10 years into their career typically go for CMT to add another feather to their cap and to differentiate themselves from their peers. So that is also the reason why CMT does not have a lot of recognition as an entry level thing. It is a super specialization in career. I personally pursued the CMT at such an early age because I knew that I wanted to specialize in technical analysis, right? I do not know anything else, but I knew that I'd found my passion. I wanted to pursue it. So unless that is also the case for you, I would suggest, you think in more broader terms rather than committing to a niche that you're not 100% sure that you're super passionate about it. Okay. Great. So thanks, Agam. Good questions. I hope that helps out some more people. And thank you everyone for joining in. As I said, I will meet you all same time, 10:30 a.m. on Wednesday. Have a great trading day ahead.